So welcome aboard, everyone. It's Walter here. Thanks so much for spending time here today. I appreciate those of you here and those of you watching the recording. Yes, indeed. So we are going to talk today about being stuck. That's what today's webinar is all about. How many of you, if it's your first time here, let me know. Is this your first time here, or have you been to other webinars, other naked trading webinars? Because today's going to be a little bit different. We're going to talk a lot about psychology, really, more than anything. And all of the elements that build your trading success and your trading strategy. You should be able to see my chart now, yes? Great. Excelente. Okay, great. All right, so let's get started. So what we're going to talk about is when you're trading, what happens with all of us is we get to certain areas and then challenges pop up. So really, the question today is how to know if you're stuck. What is the challenge, and what could be sort of the root of that challenge? What should we be looking at to help overcome it? So that's what we're going to talk about today. And then at the end of the webinar, if you'd like to, towards the end, if you'd like to take a look at the live charts, I'm happy to do that as well. All right. So let's get into it. So what do I mean by when you're stuck? Well, there's basically three areas that are most likely going to, sort of broad areas, are most likely going to be where you find yourself stuck. And so what can you do about that? Well, that's what we're going to talk about. By the way, it doesn't really matter. It's not really a prerequisite that you have read the Naked Forex book. But if you have read the Naked Forex book, at the end of it, I talk a bit about psychology. And that's really what today's session's about. It's about the psychology of trading and kind of the diagnostics that go into trying to figure out, okay, what's going on here. So let's talk about your potential challenges. So number one would be that, like, let's say that you have these fears of taking a trade and you just fear that it's not going to work out, that you're going to lose money on any one individual trade, or you're going to lose money overall as a whole, after many trades. That these fears that pop up for us, the reason why they usually crop up is because it's a confidence issue. Now, what do I mean by saying it's a confidence issue? I'm just going to change my monitor. I have this cool thing that changes the light so that you don't get basically you're able to fall asleep easily. So if you get too much of the bright blue light, it's harder to go to sleep at night. And it is in the evening time over here in Australia. So I'm just going to turn that off just for this webinar first, so that the colors are sort of true on my chart. So if you're having fears of, I don't know if I should take this trade, I really don't want to take it, I've had so many losing trades, I can't afford to have another losing trade, or you worry, say things like, I think, I don't know if this is really going to work. How many more losing trades can I take? How long can I do this? And knowing that, so far it's not making me any money. So if you have these sorts of fears, these fears are all sort of in the confidence area. So if you have a lot of fears that center on, they kind of stop you or hold you back from making proper execution, then that's confidence. Confidence is the reason for that. A lack of confidence. So the question is, what do you do? Like, how am I going to overcome this? How do I build my confidence as a trader, knowing that, yes, I have a fear of pulling the trigger, or a fear of losing too much, or whatever it is, a fear that this isn't going to work out, a fear that I've been trading for 5 years, I'm never going to be able to make it work. Whatever that fear is, the solution is to build your confidence. But how do you do that? How do you build your confidence up, right? That's the question. Well, turns out that one of the easiest ways to build up your confidence in your trading is to simply trade something that you believe in. So what I mean by that is your trading system should fit your beliefs. Your system fits your beliefs. Now, the easiest way to figure this out is to decide what kind of strategy do you want to trade. Now, I think it makes a lot of sense to trade multiple strategies, but we're just going to talk about this from the point of view of someone who's just starting off, just trading their very first live system. I think it makes sense to build a suite of systems and trade many systems for many different reasons. But in the beginning, you just want to get one that you're happy with. So let's talk about that. If you see, let's say that you decide, when I see a market that's, let's say that you decide, when I see a market that's doing this, well, what do you think? You see this market right here that's doing this. What is your first thought? You see this market. Do you want to buy? Do you want to sell? Or do you not want to take a trade? So if the answer is you don't want to take a trade, you don't want to buy and you don't want to sell, you don't want to take a trade at all, then you probably don't like trading against the trend or with the trend. But if you look at this and you think, I want to sell this market, it's gone too far, then you're a counter trend trader. You like to trade the end of trends. You like to find those swing points, whatever you want to call it. Swing trader, counter trend trader, end of trend trader, whatever. That's what you're thinking. If you're thinking sell when you see this. If you're thinking buy, then you're a trend trader. You're the type of trader that wants to ride the trend. And when you see something like this, you keep thinking it's going to go up higher and go up further. In this case, it did. But that doesn't really matter. What matters is what you think when you see something like this, when you see a market like this. Likewise, you might see a market like this market, and you might think, oh yeah, this is awesome, because I'm going to trade this kind of market. This is great. Every time the market comes up in this area, I'm going to sell, and every time the market comes down in this area, like falls down in this area, I'm going to buy, right? So this is my buying area down here. When it gets down here, I'm going to buy. In this case, of course, it wouldn't have worked because it kept going through the floor. But every time it gets up here, I'm going to sell, In that case, it probably would have worked if you had sold on this candle or somewhere around here. When it came up there, it hit there again, and it fell. So that would have worked, probably, depending on how tight your stop is and all that. So if you like these kinds of markets, then you like trading range-bound markets. You like to find support and resistance, and you like to just sell on resistance and buy on support, whatever, vice versa. So that's cool too. Doesn't matter if you're counter trend, trend following, swing trading, or trader that likes consolidations. You also might be, there's also the type of trader where you wait for the market to get really quiet, knowing that when it gets really quiet, it's going to break out and go hard. So you like those really calm markets where the market's not doing much, because as soon as it does that, as soon as it tightens up and gets really sort of prints on top of itself like that, that eventually it's going to pop and go. So that's breakout trading. If you see those kind of tight markets and you think, yep, this is going to be awesome, then you're a breakout trader. And that's, those are pretty much you could talk about reversion to the mean as well. So like traders who use Bollinger Bands or some sort of bands on their charts. See here, I could put some Bollinger Bands on here, and I could say, hey, every time the market gets beyond the Bollinger Band, then I want to sell it back to the middle of the Bollinger Band or to the other side of the Bollinger Band or whatever. The problem, of course, with that is that like swing trading or when you're trading consolidation, when the market really trends, it often doesn't come back to the middle of the Bollinger Band. It can happen where a long time it stays away from it, like it did here in this downtrend, or like it did here in this uptrend. It took a while before it finally got there. So that would be another style of trading, if that makes sense to you, where you like to trade. Like I have a couple of friends in our private forum at Naked Forex now, Nicola and Emmanuel. They both love trading reversion to the mean. Like that's they love that stuff. So That's their style of trading, you know. And if that's your style of trading, then that's great. Totally cool. So that's basically it. You're either with the trend, counter trend, you like consolidations, you like breakouts, or you like reversion to the mean. Those are essentially all the trading systems that you're going to see. So the key isn't to like, you know, that wasn't like a quiz, like, oh, what kind of trading systems are that really the point of that is determining which one makes sense to you. One of those is like, you're going to go, yeah, that makes a whole lot of sense. Of course, the market's going to come back after it gets overextended. So of course, I'm going to trade a reversion to the mean system. If you can trade one that fits your beliefs, that's going to help you a whole lot. The problem that traders get into is they find a system and they go, you know what, so-and-so has made X amount of money, or has a win rate of X percent, or has taken this account to this level, and so I'm going to trade that system because those are the results I want. That's a big mistake. The reason why is so-and-so is trading his beliefs or her beliefs. And while so-and-so might claim that this is the best or the only or whatever way to trade, whatever so-and-so says, it doesn't matter. It may not fit with you. Just like, you know, you have friends that have wives or husbands, and you're like, wow, I would never marry her, or I would never marry him, or whatever. It's the same thing. Everyone has their own style, their own thing that resonates with them. And so what you need to know is when you see a system out there, you're not signing up for the results of that system. That's largely based on how well the trader executes it, which markets the trader executes the system in, and more importantly, the risk management algorithm that's tacked on to that trading system. It has very little to do with the actual trading system. It has more to do with the trader and their risk parameters. So really what's important for you to identify is what makes sense to you. As soon as you know what makes sense to you, now you can dig into that and build out a strategy that makes sense to you. Add your own tweaks, your own entry tweaks, your own exit tweaks, all of that stuff. Does that make sense? Is everyone cool with that? Y'all cool with that? Y'all down with that? That's really what we want to do here, is we want to have a strategy that you're like, yeah, okay, that's making sense to me. Any questions about that? Now what I want to do is I want to talk about the next thing that you can do that can absolutely is a game changer. It was for me, and that is to backtest. I always write it as one word. I know technically it's supposed to be two. It just looks better as one word to me. So, and what I use for this is a simulator. Now I use Forex Tester, but there are other ones out there. I know other traders who use other things outside of Forex Tester, like Trader's Gym or something. I know some of my friends in the forum who have Apple or whatever, they use that. I think there's like a plugin for MetaTrader too. I don't really care what you use, but most of you, if you're sitting here watching this video, you're probably a discretionary trader. And what that means is that means that you make decisions and then you trade based on those decisions. And I have a link here. If you like Forex Tester, you can get a discount or whatever if you want. But it doesn't really matter to me if you get the discount or not. Or you know, they'll pay me a little bit if you use my link. It doesn't really matter. I think it's the best thing. It was one of the best things for my trading, because once I started using a simulator, I had an advantage. I knew what kind of markets the system would do well in. Two, I had numbers based on my trading. I could say, okay, well, actually, I'll show it to you. I was in there today. I was in Forex Tester today. Can everyone see my screen? Does everyone see this pound New Zealand 8-hour chart? This is back in September of 2011. Y'all see this? Okay, cool. Yeah, cool. All right, so this is what Forex Tester does. So what I've been doing is testing a strategy here. It's kind of like a trend continuation pattern. Let's see if we can find one. No, I'm not going to find one now. But so you just kind of advance the candle. Oh, there's one. You can advance the candles like this. And what you do is you 621. I mean, there's a lot. This is a pretty volatile pair, this pound New Zealand, but if you've ever traded it, you know. Oh, it's not going to go. Okay. So what you do is you add I just added a buy stop in there. You can see that was my buy stop right there. That was my stop loss level, and that was my target up there. And so that was a 3-to-1 reward to risk ratio basically on that trade. But it didn't trigger someone to delete it. So that's like a no-go. But that's how it works. You can take these trades. I can go actually to another pair. And the reason why Forex Tester is so great is it allows me to get data based on the strategies that I want to test. And I can say, oh, okay, so I know now what I expect the win rate to be in the future. So trading this system on the New Zealand yen 8-hour chart, I know based on these data what I'm going to expect in the future. Now, it's not perfect. It's not always going to work out that way. But it's my best guess. It's my best guess. And not only that, but now I get to take literally hundreds of trades in Forex Tester and build up my confidence in my strategy. I know based on my win rate and my average winner and my average loser, which is my reward risk ratio, I can figure out what my risk should be, which brings us to number 2. The second reason, so the first reason why you run into challenges as a trader is you have like issues with confidence or fears. Those can be eradicated by backtesting and by trading a system that fits your beliefs. If you trade a system that fits your beliefs, that fits with what you believe about the markets, which is, it could be anything. It could be, oh, the market always reverts to the mean, so reversion to the mean makes sense to you. Or anytime the market goes off on a wild trend, it's going to collapse and collapse quickly. So you like the end of the trend, counter trend trades or whatever. Doesn't matter. Doesn't matter what your beliefs are. But as long as you identify those and trade them, because we all end up trading our beliefs sooner or later. It takes most of us a while to get there, like me. But typically, once you get there, you should be pretty good. You should, if you do this long enough, you'll figure it out. You just got to do it long enough. And so the next thing is risk. So the reason why Forex Tester reminded me of risk is that the another big challenge we run into as traders is getting the risk all wrong. And I'll share with you what I mean. I'll give you a resource too, a free resource for this. But typically, most traders end up doing something drastic, whether that's quitting the system, quitting trading, or whatever, just giving up altogether. They do that because of the risk. And the question really is this. This is the big question that we're all faced with. This is the big challenge that we're all going to run into sooner or later. And here it is. Is this a normal drawdown or is my system broken? The other way to say that is this a normal drawdown or has the market changed? Typically, traders will either say the system's broken, it doesn't work anymore, or they'll say the market's changed. Either way, it's the same sort of idea. But so this is number 2. This is the number 2 big challenge, which is risk. Is this a normal losing streak here, or has the market completely changed and my system doesn't work anymore? So there's one way to figure this out, which is if you've done your homework in Forex Tester or whatever simulator you use, you should know the type of systems that, this type of market that is your Achilles heel. Achilles. The type of market that is your Achilles heel. So, for example, when we were talking about trend following systems, sometimes you have a system like this is actually a downtrend, right? From this high down to this low. This is actually a downtrend. But what's interesting about this, it's a volatile downtrend. It will go down and then retrace hard. It'll go down and then go up hard, down and then up hard. This is a very zigzaggy. If you look at the line chart, this is a holy smokes, really volatile downtrend. And some trend trading systems, they're not going to do very well. They need a low volatility trend. They don't do well with these really crazy pullbacks that are really spiky and wicky and stuff. They need more smooth, clean, and clear pullbacks than this. And so they'll have a general freak out and they won't do very well. So that's what you have to know. Like what is it this market that's really kind of messing me up because it's not the kind of market that I know will work for this strategy. Like the strategy doesn't work very well in this type of market. If I know going into it that, you know what, this is a great trend trading strategy, but it's only great if the market has a low volatility trend. If it's very volatile and the retracements are massive and choppy like that, like the one we just looked at, it's going to fall apart. So if I'm aware of that, then at least I know going into it that this is what's going to happen. Occasionally I'm going to hook into some trends. I've identified that it's a trend, but holy smokes, it's a very volatile trend and it's bad deal. It's a bad deal. Okay? So that's another thing. Now the last thing I want to share with you is my handy dandy, and I talk about this all the time in my podcasts, but still want to talk about it again. Why not? Wait, you guys see the right screen, right? Yeah. Okay, cool. So here is the... Just want to make sure you're seeing my chart because it said I was sharing the other screen, but we all know that's not true. Here is my handy dandy risk calculator. Now this is pretty much my favorite tool to share with people. So let me share this with you. There's a video that shows you how to use it. But let's say, for example, I test my system and I have a 35% win rate. My reward to risk ratio is 3-to-1. I'm going to risk 2% per trade, and I'm wondering over the next 10,000 trades, am I going to have a drawdown of 15% over the next 10,000 trades? What's the likelihood of a 15% drawdown? That's what this is saying. 35% win rate, 3-to-1 reward to risk ratio, 2% per trade, 10,000 trades, drawdown of 15%, and the answer is hell yes. Yes, you are, son. So now the question is, well, how do I change it? I don't want to have a 15% drawdown. That's my freak out level. I know that if I hit 15%, I'm going to have a total freak out. Because remember, what we're doing here, all we're really doing here is we're just working on number 2. Remember? This is challenge number 2, risk. And, I want to have normal drawdowns that are less than 15%. And I don't want to have my 15% drawdown because then I'll start to wonder if it's broken. So that's the context here. So I can do one of two things. I can improve my win rate, which is going to probably drastically change my reward to risk ratio, or I can reduce my risk. And even if I go to 1% here, you can see that my chances of that 15% drawdown, it's still going to happen. It's like definitely still going to happen. So now I go, well, what if I risk 0.5%? Well, now we're starting to get down to, 2 out of 10 times, it's going to happen. So it's still 1 out of 5. It's still going to happen. So I go, okay, if I'm risking 0.3%, can I reduce it? And the answer is yes, to 99% likelihood that I will avoid my 15% drawdown. So does everyone see how that works? So I am just fiddling with the risk per trade. If I'm happy to risk 0.4%, I got it down to about 97% likelihood that I'll avoid it, 96.5 or something like that, if I'm comfortable with that. But that still means that there's a 3% chance I'm going to hit my 15% drawdown. So what I'm doing is here's the issue. When we're trading and we run into this issue of, holy smokes, I'm in this terrible drawdown and I've got to figure out now in this emotional state, is my trading system broken, or is it just the market's unfavorable for my strategy, or what's going on here? What's going on? I don't know what's going on. If that's the issue, if that's what's happening, if I am actually doing that, if I'm at this point where, I'm wondering what's going on, should I stop trading my strategy because it's broken or the market's completely changed? It's hard to do that when you're actually experiencing the drawdown. It's a lot easier to do this when what? It's a lot easier to do this before I ever get there, which is why I advocate using the risk calculator. It's at fxjake.com/risk, by the way. Put that on there for you on the chart. But you just go there and you can mess around with it. The video will show you how to use it. It's not that hard. I've just basically shown you. But when you go there, you can set now this assumes that you're using fixed fractional risk management, which is the 1% per trade, 2% per trade, 0.4% per trade strategy that most traders use. Most futures and Forex traders use that. Not all, but most. So if you're using that, then this will apply. Okay? So before you go into your live trading, you work it out and you go, how do I avoid my uncle point? I know that my uncle point, my freak out point is 15%. It could be 20%. If it's 20%, I can certainly obviously risk more because it's probably not going to happen. I might even be able to go 0.5% if I can withstand my 20% drawdown, because now I'm at 98.5, 98.4% likely that I'm not going to hit that 20% drawdown. So this making sense? Everyone cool with this? Shall we push on? So that's number 2. So number 1, we said, was fears that crop up. Am I going to make it? Is it going to work? That basically comes down to confidence. Number 2 is risk. And wondering, the main question here, is this a normal drawdown or is everything completely falling apart? That's the question there. Any questions or concerns about 1 or 2 before we move into 3? I'll just wait until because number 3 is totally different. Anything else that you think, that's weird or I don't get it or whatever? Making sense? All right, let's move to number 3 then. Number 3 is, and by the way, all this stuff is not in the Naked Forex book, by the way. This is all different stuff. So it's, number 3 is a little bit weird for some people. Not so much for me. I think in these worlds, but for some people it's a little bit weird. But there's another thing that could be cropping up for you as a trader. And it's not so much your confidence per se. It's kind of a different element that could affect your execution nonetheless. And it might be that you have your risk completely under control. All that's completely under control. Instead, this third thing is what we call the mind. Which is the mental barrier. So what is the mental barrier? Well, there are a lot of them. Fortunately, there's a lot of good work in this area in psychology, but it's tricky to kind of figure out which one it is. So, for example, it could be that someone told you, and I've heard this before, it is possible it's only possible to make whatever X% per year, whatever that number is. So what, and that's affecting you. And so what I mean by that is you are taking somebody else's limitations and you're wearing them essentially. And this happens throughout our lives when we're younger. But what's interesting about this is that this can affect your trading. And I'll tell you a quick story. There was a study they did with doctors, and they're patients who had cancer. And in the study, they explained to the doctors that they're going to, that they wanted to ask the patient, ask the doctor to help the patients to think positively and things like that, because it could help them with their treatment for their cancer. It could help them with their recovery. And then they asked the doctors if they believe that these sorts of things might work, positive thinking and this sort of stuff. Do you think that'll help your patients or not? And so, of course, and they asked the patients as well, do you think that positive thinking can help you with your cancer treatment? And here's what they found. Obviously, there was a group of patients that thought, it's not going to do anything. The medicine is either going to work or it's not. Whatever, my chemo is going to work or it's not. And the doctors, the same thing. Some of them thought, it's a big deal. This can really help. Or others thought, no, there's nothing. It's not really important. Well, it turns out that when they came back and followed up with these patients 5 years later, the number one deciding factor, does anyone know what the number one deciding factor would be? Because you have two variables here. You have doctor believes in positive thinking or doctor doesn't believe in positive thinking. And you have patients believe in positive thinking or patients don't believe in positive thinking. Which group was better off 5 years later? Any ideas? And the reason why I'm bringing it up is because it directly relates to this first point here about someone telling you something about trading and you adopting that belief. So who did the best? Who was the group that won? Who was the group that was still living, more likely to be alive? Was it the group of patient, believer who believed or didn't believe, or did the doctor affect them? It turns out that the patients, what they believed doesn't matter. It didn't matter at all. Some of them died, some of them survived. What mattered was what the doctors believed. Now, if you think about what this is saying, it's a very powerful study because it highlights how if somebody that you trust, believe, give authority to, tells you that you can only do X, you're likely to do that. Whether you say that or believe that, it doesn't matter. That's going to seep into your subconscious and it's going to affect you. These doctors who didn't believe in the power of positive thinking, their patients were much more likely to be dead 5 years later. Whereas all of the patients who had doctors who believed in the power of positive thinking were alive 5 years later. Same group of patients, they all had cancer, but the best predictor of whether or not they survived 5 years later after their cancer diagnosis was whether or not their doctor believed in the power of thinking positively. Now, isn't that interesting? What that says is that people who are in positions of authority can affect your trading. It could be your boss, your older brother, your wife, whoever. If they believe in some things about trading, you are likely to believe them as well, and that's likely to affect you. If your accountant tells you shouldn't be trading, that's going to affect you. I had a trader who told me, my accountant said, don't do it, don't trade, don't do it, that sort of thing. And so that it really affected him. And other people who've had a wife or husband where they don't want them to trade, that affects them, greatly affects them. So you can have a mental barrier in the form of someone else's beliefs, for sure, and that can affect your trading. Other things also come up, like traders think that what they're doing is wrong. So they think that trading is wrong. They say things like, well, it doesn't add anything to the economy. It doesn't do anything. It doesn't, how can I justify trading when it's not even, it doesn't do anything for anybody. It's just taking money out of the markets. Well, let me ask you a question. Imagine that you were going to go on holidays and you had to buy some euros because you're going to go on holidays and you need euros. And imagine that you would have to take those euros, or let's say you live in Canada. You got to take your Canadian dollars and you got to put an ad in the paper and say, look, I've got, 10,000 Canadian dollars. Can somebody please give me the equivalent in euro? I'll meet you on Saturday, or you can call this number and make an appointment. We'll see if we can come to an arrangement. Or you hire somebody to have an auction where you have your 10,000 Canadian dollars and you want to auction them off to the highest bidder who's willing to pay in euros, and they advertise it in the newspaper and all that sort of thing. Of course, that sounds ridiculous because you don't need to do that. All you have to do is find a money changer and they'll change it for you into euros. Or you can have you can spend your Canadian dollars over in Europe and they'll pull out the equivalent in euro off your bank account card or whatever. So that much is true. But the reason why, and this is important, the reason why the markets are so easy to get in and out of, the currency markets, is because there's so much speculation going on. The speculators, that is you and I and everyone else in this market, whether it's the retail market or outside the retail market, doesn't matter. They're lubricating the machine. They're making this machine go by having all of these speculators. And that's the same in any market. It's difficult. It's often difficult. It takes a lot of time to sell a house or sell a piece of property. These sorts of things are difficult because they're not as liquid. There aren't as many speculators in those markets. They do have speculators, but not nearly as many. They're not as easily it's not as easy to get in and out of those markets. So when people say that what you're doing is bad or evil or whatever, what have you, that's not necessarily true unless you believe it to be true, unless you adopt their beliefs. So there's really nothing bad about lubricating the markets and making them more liquid at all. There's nothing wrong with taking on risk where other people won't take that on. But yet people find this as a mental barrier. So that's another one. Trading is wrong or evil, or making money out of the markets is wrong or evil. You're not doing anything. Anybody who thinks that has obviously the wrong idea of trading. They think that you're just sitting around in your underwear clicking your keyboard when, in fact, we all know that you're backtesting hundreds and thousands of trades and working out risk algorithms. Like that's what, and even if you're automated trader, you're babysitting your virtual private server. See, there's lots of things involved with trading, no matter how you do it. All right, so the last thing here is the subconscious barriers. Now, these can really come from anywhere. And these can be things about people who are, like, for example, you might have had a situation where when you grew up, money was hard to come by, and it was like people who had money were kind of magical or whatever, viewed as different or what have you. If that's the case, then you have some subconscious thoughts that are affecting your trading. They're affecting your relationship with money, and it's really important that you understand that not only is it important to acknowledge this, but it's important to do something about it. And there are lots of different ways that you can do this. You could use hypnosis. You can use subliminals. You can when you go to sleep, like as you're falling asleep, you can repeat something to yourself, like a mantra that's in the positive and affirmative, and it's in the present tense. So I take every as you're falling asleep, you could say, like, if you have a problem sticking to your rules, for example, as you fall asleep, you can say, I take every trade, and I take every trade signal, and because I know my trading system makes money. I take every trading signal because I know my system makes money, or something like that. To seed your subconscious. That's a really good time to do it as you're falling asleep. So there are lots of different ways of doing that, of approaching that. But the most important thing to keep in mind is that we all have these subconscious thoughts. Sometimes they're about wealth and wealthy people. Sometimes they're about trading. Sometimes they're about money in general. Whatever it is, you need to make sure that you are implanting more useful, profitable, helpful thoughts, because there are good people that have money and there are bad people that have money. There are horrible people that have, lots of power, and horrible people that have no power. These sorts of things are independent. So for you to equate one with the other is just not true. And if that's something that you feel like you do, then you can definitely change that by using things like subliminals, hypnosis, or even mantras as you're falling asleep and going into that it's called the hypnagogic state as you're falling asleep. Does that make sense? So that's another thing you can do. So those are the big three challenges in terms of fears rooted in confidence issues, risk problems, feeling like your system's broken, and mental barriers that are affecting. They can often affect you in many different ways, these mental barriers. So they can creep up in terms of like affecting the way that you execute. They can creep up in terms of affecting your goals as a trader, like what you're trying to achieve, all of that. So just keep that in mind. Are there any charts that you guys would like to have a look at? Because I'm happy to look at the charts now. I'll show you the charts that I'm watching right now. Obviously, I've been watching Bitcoin for seems like years, but mostly since last year, about a year. And it's just recently fallen out of the wedge. So this is kind of the daily, what we call the squeeze play. It's a squeeze play on the daily chart right here. So this squeeze play here has broken, and probably I'm thinking this is going to go down to 2100, 2800, or 1800, somewhere in that area, it looks like. The way that you can see this, or I can see this, reason why I think this is the case is because this is where our support levels are. So probably 1800, 2100, or 2900. Those are those are the most likely floor places where you might see Bitcoin bottom out. So in other words, it ain't there yet. It ain't even close. It's definitely in a downtrend. So that's one. Another one that I'm in a trade right now is the CAD yen. This is essentially, actually, it's probably easier to see this on the 2-day chart. So I'm going to go over to my 2-day chart real quick. My computer's going to do a little bit of a freak out now, I think, but it'll take a minute for it to move over, and then we'll see those 2-day charts. CAD yen is a chart that I really like at the moment for a sell. So this is what we call a drop trade, and I'll show you why. It's basically because the market has dropped off this trend line and is likely to fall, as I see it, and likely to possibly find support a bit further down. I'll show you. So this is the trend line that our CAD yen. This is the CAD yen 2-day chart. This is our little trend line right here. We've bounced off it several times. We've broken lower, getting in on a retrace move here, a move back up and then falling back down is probably, for me, the easiest targets are going to be down here at 82.50, and I think it's 81 even. So 82.50 and 81 even are my targets of support and support down here. So usually when this happens, there's a bit of a pullback, and then eventually it'll fall back off and start moving down towards my target. So that's one that I like right now. I can put my stop loss up here above this swing high, or I can put it down here above this candle right here, this candle high, or whatever. Lots of different places for the stop. But the important thing is right now, it needs to come up, retrace, probably hit some resistance where these lows are here, where this wick is. These lows are here. Hit some resistance there before it falls off again. I like the Swissy as a potential last kiss trade. It's a little bit hard to see on this time frame. It's easier to see on a lower time frame, but if you look at it, you can put a box on the Swissy. I'll show you. Like, for example, on the 4-hour, I can put a box on this sucker, and I can say, you know what? I think this Swissy has broken out of the box. And not only that, but I think it may come back up. So if my box looks something like this, it may come up and touch that box and give me a last kiss. Last kiss is just a breakout with a retouch. So that's what that would be. A breakout and a move right back up to here. That would be right around that 99.70 area. And what else? What else? What else? That's probably the, yeah. Oh, the Euro Singapore is interesting to me. I don't know how many of you trade that. Potentially could be just retracing here and then fall back down. The issue really is it needs to break this support level clearly, and that's at 56, 1.5600. I really like the idea of going long New Zealand yen and New Zealand Swiss and all the way, but and going short the pound New Zealand. Right now, it's just not. The consolidation is a bit weird. So, like for example, if the pound New Zealand were to fall off this trend line here, I could take a sell. Or if it comes back up here where there's some resistance. See how the market's kind of hit this level several times? So this is the 1 hour pound New Zealand. If it comes up there and hits that level again, I could be tempted to short it because it's in a downtrend. I really want to short it. I don't want to go long this pair right now. I want to short it. So I want to short it up here or short it if it breaks this trend line. And that's another one. Yeah, so those are the ones that I'm kind of watching right now. That CAD yen sell and the long on pairs like the New Zealand Swiss, New Zealand yen, New Zealand CAD even, and then shorts on like the pound New Zealand and the euro New Zealand. Those are the ones I'm mainly watching right now. Does anybody have any charts that you want to see? Any ones that you like? You can let me know and we can post them up here. If you have any good looking ones. Oil is a great one too for a downtrend, yeah. So oil has been going down for a while. Really what we want to see here is kind of like a swing, kind of like a little swing high here. This candle is going to close in 7 minutes, which is great. And this is the highest high we've seen of the day on the 1 hour charts. So if we print this candle here like this and then it falls lower than the low of this candle, that could be a trend continuation pattern on oil. I think, however, if my memory serves me, we are, I just want to make sure that we're up, what we're up against. So I've got support and resistance there, and I've got support and resistance down here. Yeah, it's kind of in between levels, so I would expect it to fall to 50 for sure. 50.50, yep. 50.50 is one that I would watch for. So I think oil is going to fall further for sure. All right. Well, thanks so much, guys, for spending time here today at the Naked Trading webinar. I hope that helps. And I hope that you were able to hone in on those things that are affecting your trading, those challenges, no matter where they are, no matter where they're on, they're associated with your confidence or your risk. So I hope that helps. And we'll see you soon at another webinar. Thanks so much for your time, guys. We'll see you soon, okay? Take care. See ya. Bye. Thanks, Adam. See ya.